Happy Tuesday. What's going on, team? It's Ricky with TechBud Solutions. And as many of you guys saw, the NASDAQ market shortly after the open saw an aggressive retracement. What happened? Again, we caught this live in today's live trading session with my LPP team. If you ever want to tune on in to watch me trade live, it's the second link in the description down below, and you can start as soon as tomorrow. With that being said, what was shared is that the market was bogged down by a decline in chip stocks, with artificial intelligence darling Nvidia and Broadcom each more than 2% lower after Wall Street Journal reported that SoftBank and OpenAI's $500 billion AI project has faced difficulties in getting underway. So again, anytime that there is any expectation of a decline or lowering of guidance, then that is when we can see these retracements, especially at these extremely elevated levels. I think that the stock market, I don't want to say is in for a rude awakening, because we know how irrational the markets are being and they can continue to be. But again, fundamentals are about to come into play. These companies are going to be reporting earnings. We had two companies today that are a little bit larger that reported earnings today. They're not tech focused, but General Motors saw a gap down 7% in the red. Lockheed Martin also down 6.32%. The thing that I want to remind you is that yes, in the short term, fundamentals don't matter, but long term, they always do. And when you have companies like Tesla that are going to be reporting earnings tomorrow after the market closes, or where you have Google, Alphabet, a multi-trillion-dollar or $2.3 trillion company that is set to report earnings, in my opinion, Google is going to be in the forefront of what we want to see, how it reports earnings, and how it reacts. Because based off of how Google reports, I think the market will make assumptions on how the rest of these big tech companies will also report as well. It will pretty much set the tone for the earnings that are set to come. So as of right now, Google is trading at $189 per share. It hit previous lows of $140 and previous all-time highs of $206. I want to remind you, tomorrow after the market closes, this company and Tesla are going to be reporting earnings. And yes, the markets will react. No one can predict the future. You can share your thoughts down in the comment section. But if you're a beginner, this is an amazing time to just be watching the market. It is, and there is no question that there are no good deals right now. Google is not a good deal. It's not about that, oh, you can't make money even if it's not a good deal. Of course you can, because if you jump in at 188, 189, and then Google begins to skyrocket after beating earnings, if it does report, then sure, it has some uptick potential. But at what cost, right? When asking, is the market a good deal? Long term, no. 189 is an extremely elevated level, and even for something like Tesla, $320 per share, a $1 trillion market cap for a company that consecutively for 2 quarters has reported lack of growth year over year, lack of revenue year over year. And for those that have been paying attention, Tesla will be losing its EV credit at the end of September. So something to also take into consideration. But it's not going to surprise me if Tesla begins to uptick because of what Elon Musk can say during its guidance call. Elon supposedly is coming back to Tesla full time, and this is supposed to rally up Tesla investors. But we'll see if that can change the sentiment that is currently clouding Tesla's sales. So again, no reason to predict. I'm here to watch just like many of you guys. All I'm here to say is that I don't see there to be any good deals. If you wanted to go in for a trade, I get that. When it comes down to long-term investments, it makes zero sense to want to buy at these elevated levels when inflation is going up, when there's still tariff concerns and these tariff deadlines that are supposed to end on August 1st. Of course, until this firm deadline is no longer firm again. We'll talk about this a little bit later, but again, at these elevated levels, we saw and got a glimpse of how quickly markets can retrace. And I think that this is just showing how markets are willing to de-risk before uncertainty. Look at this. Look at this on the day chart. This is not a good deal. It's not that you can't make money by buying at these elevated levels. Markets can continue to push up, and we need to acknowledge that. But at what cost? Risk to reward. What's your profit potential versus your risk? And it becomes very clear that the risk is so much greater than any potential profit, especially as we know a pullback is likely to happen. I'm excited to follow up, and I'm excited to see Tesla and Google, or Alphabet, the mother company of Google, report earnings tomorrow. I hope to see you there. I do plan to live stream it, so just another reason to subscribe to the channel if you guys have not done so already. And again, that will be shortly after the market closes on Wednesday. So I hope that earns a thumbs up. Please consider subscribing, but please be super patient and super calculated with the trades that you choose to take during earnings season. Less is more, especially in this market full of chaos. Like always, let's make sure that we end the year on a green note. Take care, team.